Alrighty, what's up guys? This is Taylor and this is your free video for Tuesday the 8th of November. Thanksgiving is creeping up, but I hope your week is off to a good start guys, and since we last spoke, Mama Market here has kinda had a tough time fighting its way out of the paper bag. The paper bag known as the daily squeeze. So here is where we are at. We're kinda seeing the big game of tug of war being played in the market right now. So let me draw my rope. And you guys can judge my artistic skills, but on one side of the rope, you got sectors like the energy sector, the financials, the industrials, the materials, and we'll throw healthcare into the mix here. On the other side of the rope, you've got the BMOC, the big man on campus, and that's the QQQ. So here's what I mean by tug of war. If you look at XLE, for example, energy looks super bullish right now. And right now this is my major focus in terms of buying the dip. You got a beautiful daily trend going. We got buy signals on the daily through the 1 hour. And the most attractive thing I think here for energy is that big whopping weekly squeeze. So energy looks awesome. The financial sector, not as strong as energy, however, the financials do a pretty good job of cleaning things up here. Alright, check it out. We are back above the daily 50. We're back above the 21 EMA. You have the positive cross of both of those moving averages. So mind you guys, if my bars are blue, the blue bars means the 21 EMA is above the 50. You got buy signals on the 2 hour through the 30 minute, so financials not too shabby here. The healthcare sector, XLV, also not too shabby, trading back above the 50, the 21, and the 200. The industrial sector, XLI, kind of goes beast mode. Buy signals on the 2 hour chart all the way down to the 5 minute. Positive cross with the 21 back above the 50, and very much like healthcare, you're trading back above that 200. So the industrials look solid. The material sector, XLB, that shapes up pretty good. And even here today, the semiconductor sector up 2%. Even the semiconductors are waking up. You got your daily squeeze here. We are back above the 50, 1 hour through the 5 minutes, got some buy signals. So the point being, a couple different pockets in the market are starting to look pretty solid. You got improvements in the structure. You got a good handful of buy signals. However, you look at the S&Ps here, and like I just mentioned, the S&Ps really can't fight their way out of the paper bag. And the reason being is you got this big game of tug of war. Energy looks amazing. Financials look good, healthcare looks good, industrials are strong, but on the other end of the rope there, you've got QQQ/XLK. And this is one really important, one really heavily weighted spot in the market that for now, my friends, is lagging behind a bit. So if XLE is the poster child of like a really strong trend, the QQQ is a little bit of the opposite. We're trading under the 200. By a good few country miles. We're under the 50, and we're still trading under the daily 21 with that daily sell signal. So last time we spoke, we discussed the potential idea of maybe seeing this market putting in a short-term rally. And we talked about the idea of that daily 200 around 4,000 or so, 4,100. Maybe being a good target here if the market can wake up. So as far as the potential of that happening, two things have to come together here. In the analogy that we're using right now in the options room, the market is the Chicago Bulls. Right, so energy is Scottie Pippen. You got Scottie P. The healthcare sector is Steve Kerr. The financial sector is Big Tony. The industrials are BJ Armstrong. In QQQ technology, that's Michael Jordan. So if the Chicago Bulls, aka the market, are going to perform well here, you got to get something out of MJ. You've got to get something out of your best player. Otherwise, Steve Kerr and Scottie Pippen might show up, but that's a lot different than them showing up and Michael Jordan balling on out. So the point being, if the S&Ps, for conversation's sake, have got any shot here at rallying towards that daily 200, QQQ has to step up. And what I mean by step up is I don't think we necessarily have to see technology come into... I don't think we have to see technology necessarily turn back into crazy leadership. I don't think Apple has to go into some, spectacular uptrend. I don't think you need Amazon back towards 130, 140, but what I do think the market needs, at a minimum, is for the Apples, the Amazons, and the Teslas to stop bleeding out. If we could get a simple reversion to the mean in Apple and Amazon and Tesla, that would be great for the overall market. Get Apple back towards 145, 150. Amazon, who is pretty damn oversold here. If Amazon starts grinding back towards 100, Tesla, who they really clobbered earlier, if good old Tesla here could try to grind back towards 220, the bleeding stops, and then I think the market, the S&Ps, could actually benefit from some of the strength we're seeing in, the energy sector, the industrials, a few other spots there. So that's one big piece of the puzzle, and arguably the most important piece of the puzzle here continues to be that daily squeeze in the dollar. So if you can get technology off the floor, and then if we can see the daily squeeze here in the dollar actually fire short, then I think the market's got a chance here at a pretty decent rally. So the importance of the dollar, the dirty Dixie's been in a really strong trend all year long. And I would say here, guys, for the first time since the trend started, things might be shifting in the favor of the bears. So a couple of observations. For starters, we got the daily squeeze here with a negative histogram. No more buy signals on the big 3 indicator, but we actually have sell signals on the 1 hour, the 30-minute, and the 15. If we zoom in here to the daily chart, notice how we're very close to seeing the 21 EMA cross negatively under the 50. That hasn't happened since the trend started. So lower time frame sell signals, daily squeeze of a negative histogram, on the verge of a negative cross. All we're missing here, guys, is a move under, really 109, the level from which we bounced previously. If we can get a good break below that level, at that point I think we'll see that daily squeeze fire short, and potentially that might open the door here for some pretty good downside in the dollar. Again, all conversation's sake for now, we got to get through CPI and we got to get through this week, but that daily squeeze fire short, there could be some pretty good juice here. Wouldn't be the craziest thing to maybe see that dollar kind of unwind down towards that daily 200. And I would think at that point, Dixie down towards the daily 200, then you might be able to see the S&Ps making their way up towards their daily 200 around 4,100. So, while we are waiting for all of that to unfold, where are the good setups? And I think the one spot we'll focus on tonight, guys, is the energy sector. And again, a big part of what makes the group so attractive here is the trend and the squeeze on the weekly chart. So this trend, let's dissect it for a bit. The weekly trend really started back here pretty much this time last year. 21 EMA crosses positively above the 50, and ever since that happened, you got a good quality trend here. Dip to the 50, next leg higher, dip to the 50, huge rip to the upside, and then notice, most importantly, when the weekly squeeze histogram went through that negative cycle, look how good the structure held. Right. Weekly squeeze, squeeze fires long, you get a big old ripper, then the squeeze comes to an end, and the histogram goes to that negative cycle. But look how good the structure held during that negative cycle. At no point did it break that trend structure. So you print a fresh weekly squeeze, and now you got that bad boy firing to the upside. So here's the goal, guys. It's not to say energy is going to fire the squeeze further. It's not to say it's going to rally towards $100. The point being, and the goal being, we got a good trend, we got a good structure, and we're pretty early here. Squeeze just fired long last week. It hasn't officially broken out yet. Again, not to say it has to unfold, but the goal should be that if 4 to 8 weeks down the road, we're doing one of these nightly videos and energy's up there at $100. Ideally, we've made some pretty good cash along the way. That's a huge part of trading. Run the scans, find the good setups, then have the discipline to take your shot. So as far as taking your shot here, the only difficulty right now as far as loading the boat on energy, we are a little bit overbought. So as far as a good entry, I think XLE is buyable in the short term all the way down towards that daily 21. So not to say we're going to get there, but if you take a nibble around $90, I think you want to continue to buy all the way down to that daily 21, so long as it holds the support, of course. And I really think you can take your pick of the litter here. So one that we like right now, and we got some calls in my mastery, is the big Oxy, the big old Oxy, which actually announced earnings tonight. Looks like it's trading flat after earnings, so crisis averted for now. But as far as Oxy, guys, you got the buy signals on the daily chart, and on the 4-hour and the 2-hour, and very much like XLE, you got a pretty looking weekly squeeze here. So we like Oxy. Of course, you got ExxonMobil, which is just really, really strong. That's a 2-hour chart. Let me show you a daily. And there is your daily for ExxonMobil. All right, really strong, but also could pull all the way back to 107. Still be a really good setup. So pick your spots wisely, but the goal for now is, because we're talking about this, kind of at the cusp of all these big breakouts and weekly squeezes firing long, a month, 2 months down the road, if energy's just been on a tear, we got to make sure we're getting our piece of that, because I think it's one of the best looking structures in the market. And one more for the road, guys, before I cut you loose here, the semiconductors. Now, the semis are nowhere near the quality of energy, but I do think things are shaping up here. Daily squeeze positive histogram. We got the cancellation of all the sell signals, and look at your big 3 indicator. All kinds of green beans on your lower time frames. So NVIDIA, of course, really strong over the last week or so. NVIDIA looks poised for 150 plus. Right, 150 makes a lot of sense. Weekly 21 EMA kind of fulfills the job of filling that gap. But I think if the S&Ps have got to, again, taking it day by day, right? But in a world where the S&Ps have room to the daily 200, NVIDIA's probably got the same move in store. At the same time, if the S&Ps go flatline this week, then down goes NVIDIA. But for now, she looks solid, and one that I actually bought some cheap calls on here today is AMD. So not a group trade, but AMD kind of fits the criteria of what I call the reversals trade. So real quick, what is the reversals trade? Step 1, find a stock that is oversold on the weekly chart. AMD here trading a good, 2 or so average true range moves under the weekly 21 EMA. That's oversold. So step 1, find yourself an oversold stock on the weekly. But then step 2, got to look for signs of improvement on all your lower time frames. So where's the improvement on our daily chart? We got a daily squeeze. You got a rising histogram. And we have 3 consecutive closes above that daily 21 EMA. That's really important. So there's a progress on your daily. Now where's the progress across your lower time frames? We can see that through the big 3 indicator. No sell signals, and the 30-minute chart actually goes bullish. So that was kind of the, that was a trade that we did in the rooms 2 weeks ago in NVIDIA. NVIDIA was oversold on the weekly. We got a couple of closes back above that daily 21 EMA. We had a lower time frame buy signals on the big 3 indicator. So we got long and we caught a pretty good move there. And sure enough, look where NVIDIA is. Right underneath that weekly 21 EMA. So it's a trade that does require the market doesn't fall apart. But I do think if the market can keep it together here, guys, at minimum, I think over the next week or so, you could see AMD up towards the daily 50, around $68. Maybe a little bit higher. You got the weekly 21 around $72. So in the event that move does unfold, As far as the calls I bought here today, a move into $72 would net me a $17,000 profit. So, you won't hear me complaining. But there you have it for tonight, guys. I gotta run here. I gotta make the premium video for the folks in the gold room. And then I gotta make another quick video for the folks in my mastery. Got a busy night ahead. And I got some NBA basketball. So, the question of the night. You guys know I like to ask you questions and I do these videos. What's your favorite sports team? Doesn't have to be basketball. It can be any sport. Comment down below. What's your favorite sports team? And if you haven't already, hit the like and the subscribe button. And we'll see what's up here, guys, next few days. Focus on the dollar. Focus on all the pretty colors in the energy sector. I think the semis have got a decent shot here. And we'll see what's up with CPI. Won't be a dull week, but as always, I hope you guys found this helpful. And I'll talk to you in the next one. Adios.
What's up, traders? This is Taylor from Simpler Trading. I wanted to thank you for watching our video, and if you liked the video, go on ahead and comment down below, hit that like button, and make sure you're subscribed and hit that bell icon to get a notification anytime we upload our next video. And of course, if you want to watch us trade live in real time with our own money, check us out at simplertrading.com. Until then, trade safe, and I'll catch you in the next video.